Why did Nvidia reportedly commit approximately $20 billion in cash in late 2025 to license Groq's LPU inference technology and hire Groq's founder, president, and core team members, while leaving Groq and GroqCloud independent? And how does that choice reshape the contest between low-latency LPUs and high-throughput GPUs for AI inference? In September 2025, Groq raised $750 million at a reported valuation of $6.9 billion. By late 2025, Groq had reportedly cut its 2025 revenue forecast to approximately $500 million. Technologically, Groq's LPU architecture uses large on-chip SRAM and static scheduling to deliver deterministic, ultra-low-latency inference for small-batch workloads. By contrast, Nvidia's H100 and H200 GPUs rely on large off-chip, high-bandwidth memory to support high-throughput training, large-batch inference, and very large models. Economically, Nvidia's data center revenue exceeded $115 billion in its fiscal year 2025. Around the Groq deal announcement, Nvidia reported holding more than $60 billion in cash and cash equivalents. Here's the problem. On 24 December 2025, Groq announced a non-exclusive inference technology licensing agreement with Nvidia, explicitly keeping Groq as an independent company. Nvidia stated that founder and CEO Jonathan Ross and President Sunny Madra will join Nvidia to advance and scale the licensed Groq inference technology. CNBC, citing investor Alex Davis, reported Nvidia will pay approximately $20 billion in cash for the Groq licensing and talent deal. As of late 2025, neither Nvidia nor Groq had confirmed the roughly $20 billion deal value in SEC filings or detailed press releases. Reports note that the roughly $20 billion cash consideration equals about one-third of Nvidia's approximately $60 billion cash position, making it material but not transformational to its balance sheet. In other words, Nvidia is deploying a large share of its cash reserves without fundamentally changing its overall financial position. Here's their position. Groq stated that GroqCloud will continue to operate after the Nvidia licensing agreement. Groq said its intellectual property ownership remains with Groq, while Nvidia obtains a license to the inference technology rather than acquiring the IP outright. Groq emphasized that the Nvidia deal is non-exclusive, meaning Groq could, in principle, license similar inference technology to other partners. Secondary reports conflict on whether Nvidia is acquiring substantially all Groq inference assets or only licensing IP. But primary company statements confirm a license and large-scale hiring, not an asset purchase. Bernstein analyst Stacy Raskin argued that structuring the arrangement as a license plus talent hire, while keeping Groq independent, helps reduce antitrust risks compared with a full acquisition. Analysts from Cantor Fitzgerald, Bank of America, and Baird characterized the Groq deal as strengthening Nvidia's competitive moat in AI inference. D.A. Davidson analyst Alex Platt publicly questioned Nvidia's logic, citing Groq's memory-limited architecture and Nvidia's existing roadmap as reasons for skepticism. Other analysts have suggested that by licensing Groq technology and hiring its core team, Nvidia can neutralize a differentiated inference competitor and reduce the likelihood rival chipmakers gain access to Groq's LPU stack. Operationally, Groq Run and partner benchmarks have shown Groq LPUs achieving faster time to first token and higher tokens per second per user for large language models at low batch sizes than Nvidia H100 class GPUs. Vendor-reported measurements indicate Groq's LPU systems can deliver on the order of 10 times better energy per token for some low-batch inference workloads compared with conventional GPU-based systems. Nvidia's published roadmap identifies Blackwell, including the B300 series, as its next-generation GPU platform for AI, succeeding Hopper-class products like H100. Nvidia has described its future Rubin architecture and AI factory strategy as central to scaling AI infrastructure, and reports say Groq's compiler, static scheduling, and low-latency techniques will be folded into these platforms. Looking ahead, Nvidia links today's H100 and H200 high-throughput GPUs with upcoming Blackwell B300 products in a roadmap for large-batch training and inference using very large models. Nvidia has referred to its Rubin architecture and AI factory strategy as central to scaling AI, and integration reports suggest Groq's compiler and low-latency methods will be embedded into those future platforms. Groq's LPU design around large on-chip SRAM and static scheduling targets deterministic, ultra-low-latency inference for small-batch workloads, and reported benchmarks highlight improved time-to-first token performance. Groq reported measurements show about 10 times better energy per token on some low-batch workloads, while Nvidia is reportedly spending roughly one-third of its approximately $60 billion cash balance to license that inference technology. Analysts suggest that by licensing Groq's technology and hiring its core team, Nvidia both reduces the likelihood that rival chipmakers gain access to Groq's LPU stack and absorbs a differentiated inference competitor. At the same time, some analysts see the deal strengthening Nvidia's AI inference moat, while Alex Platt questions the move given Groq's memory-limited architecture and Nvidia's existing roadmap. For Groq, remaining an independent company with Groq Cloud continuing, retaining IP ownership, and operating under a non-exclusive license framework means it can keep running its own cloud business while, in principle, licensing similar inference technology to other partners.